Hey, welcome. In this video I'm going to talk about how to know market trend. This is the only beginner video you will ever need about how to read the market. Let's dive in. How to know market trend for beginners. There are types of trends. We have an uptrend, we have a downtrend, and we have consolidation. Market in an uptrend, the market moves to the upside. In an uptrend, the market moves to the upside. As you can see, the market is moving to the upside. It retraces, break structure. When a structural point like this be broken to the upside, it is called break of structure. It retraces again. Another structural point, you can see another structural point. It's been broken, break of structure. Break of structure. It retraces again. Another structural point broken, break of structure. So this structural point is called higher high in an uptrend, and this retracement is called higher low. Higher high, higher low, higher high, higher low, higher high, higher low. Are you getting my point? So when a structural point is being broken to the upside, it is an uptrend, as you can see. So how to know? That's one of the ways to know the trend of market. Also, you can use your trend line. As you can see, trend line. When you mark your trend line and it slant to the upside, you know the market is moving to the upside. So that's for an uptrend. So let's go to the downtrend. This for downtrend. When a structural point is being broken to the downside, as you can see, another break of structure. A structural point is being broken to the downside. You can see a break of structure to the downside. But in an uptrend, it's break of structure to the upside. You can see another break of structure. That is an uptrend. That's a downtrend. You can see a structural point is being broken to the downside. This signifies a downtrend. So lower low. When the mini retracement is called lower high. No, the market retraces and break aggressive. In this aggressive movement is called an impulsive movement. This mini pullback is called retracement in a downtrend. In an uptrend, this aggressive break to the upside is called impulsive movement. This little pullback is called retracement, and another break, this one is called another aggressive break to the upside is called impulsive movement. That's how it moves. So this aggressive break to this downside is called lower low. This mini retracement is called lower high. Lower low, lower high, lower low, lower high, lower low, lower low. So that's how it is. As you can see, as I have labeled it. So when a structural point is being broken to the downside, it is called, and it is a downtrend. And one of the criteria to know if the trend is in a downtrend is when you pick your trend line and it's slant to the downside. It means the market is in the downtrend. Let me use the tools. Okay, this is the tools, Gogo. This is the tools. As you can see, this is the tools. So, as you can see, as I put it, as I place it on the mini retracement, it's slant to the downside. That means the market is in the downtrend. These are the tools you'll be using. I'm using a tablet to create this video. If it is on laptop, the visual will be more even organized than this. You can see this are the tools that you use to analyze. So that's it. Also we have also we have ranging market. Ranging is a sideways movement, as in the market doesn't have a clear direction. So as you can see, the market doesn't have a clear direction. It was just consolidating, ranging, moving in a sideways, as in it's like something is resisting it when it gets to the upside, and something is supporting it when it gets to the downside. So this is ranging market, and ranging market is quite somehow difficult or tricky, and because when you have placed a setup, sometimes the market will just be reversing, eating your stop loss. When you sell, the market can give you a little profit and retraces back with your stop loss. So it requires some experience and able to sometimes scale to the lower time to get a bigger entry. So to know the major trend of the market, you have to scale to the higher time frame. You have to go to the higher time frame. Higher time frame are the 1 week time frame, daily time frame, 4-hour time frame. Those are the higher time frame. Those are the higher time frames. 1 week time frame, daily time frame, 4-hour time frame. Those are the higher time frames. When you go to the higher time frame, it helps you to get the bigger picture, as you know wow, this is where the market is going, and you can know the rate trend. But if you go down to the lower time frame, it's like noise. It's a noise. So you may not get the better picture. You are just trading under the noise, and in the lower time frame you get more setup, more trading opportunity, but you have higher chances of losing more trade. But when you go to the higher time frame, you get fewer setup, and you have higher chances of getting we have higher chances of winning more trade. So that is it. So that is, you have to go to the higher time to get the bigger picture. So structure is the main, as in when you know how to read the structure, 70% will have been 70%. You have get this 70%, as in you, like when you know how to read the structure of the market, most of your challenges in trading will have been solved, because we just need little few tricks to back your structure. That's just it. To back your structure, and just some little things. Wow. And like as I trade smart money concepts like structure, liquidity, PI, but I trade structure. I trade current swing like this. You see, as I've said, this is just a brief, not teaching you any strategy. So this is, let me know. Like this. This is a breaking structure, when this structure is being broken to the upside, it means we are in an uptrend. So I'll just focus on this current swing like this. This is the only zone I will be focusing on. This is the only zone I will be focusing on. I will just, based on structure, I will just, to confirm this swing structure, I will expect a change of character like this. This is a change of character. This has confirmed this swing. So I will expect it to come to this cancel. Anything below 50% is a PY, as in the price. Anything below 50%, the market can buy from that zone and continue to the initial direction. Like anything below this line. Let me use tools. I'm not to use, but I have to delete this order. I don't want to delete it. I will still make a proper one. So anything below this 50% retracement, the market can just buy from there. So I have to look for more confluences or some criteria that will make me to take that zone. So if I find it, I will just take it. If the criteria is not clear or it doesn't show in this swing, I will be more skeptical, or I will not trade it. So if my criteria is being met, I will buy from here. So that's it. But to get the main structure, because this structure of it is confusing, because there is major structure, there is substructure, there is minor structure. Sometimes you might be trading minor structure or substructure. We think you are trading the rate trend, so you just get trap out. Like under this swing structure, there is retracement like this, substructure like this. There is also minor structure like this under this one swing, you can see. So to get it, it requires some bit of study and knowing the higher time frame, trading from the higher time frame to get the bigger picture. But this video is just for you to know the trend of how the market moves, the trend of the market. This is just a basic story. I will still explain more in the next video. Thank you for watching videos. Do one favor for me, subscribe to this channel. In this channel, I share beginner tips on trading, about trading, how to get better at trading, anything related to beginners. This channel is for you. Thank you. Grazie.